Hey, everybody, welcome. I don't know if we've got an issue with Zoom or what, but not everybody's been getting the reminder invites. I'm still getting them, so I'm assuming everybody else is getting them, but evidently not. So I know that we also have some questions, so heard from a few people. So if you would, you know the drill. Hit us up on the Q&A, harass us on the chat. I think we've got some stuff to talk about. The question is, will Congress actually do what they said they're going to do, or hinting at it, or are they just going to go and do what they do and party on their own? So I don't know. So who wants to go first here, Jack or Adam?
Let me do my stall, and then I'll let Jack do his long version of stall. So that Jack can then say, "Oh, what did that thing say again?" Now, so basically, for the people that the wonks like Jack and myself that have been following this, let me start by saying props to Kerry Edwards if he's on the phone today, because he successfully did call out that in fact I am wearing the same clothes that I wore yesterday for the webinar.
That's
not
true.
Gonna sugarcoat that. The days are running together. So anyway, they basically broke the package into two separate bills. Bill number one, which was really the guts and the meat and potatoes, the bipartisan package that went through, is what we're going to be talking about mostly today. What that did not include was some additional state and local funding and the liability protection for businesses. That was the primary piece. That was about 150 billion. What's a billion here, a billion there? So what is included is it's under Secretary Mnuchin or Senator Mnuchin's website and name, but it's 748 billion. And kind of the big things that are in there. One, round two of PPP, and as Jack and I spoke about last week, the big things about round two of PPP are, one, round two, and that's going to be isolated down to businesses that have had a 30% or greater revenue decline anytime in a quarter in 2020. Really interesting question is, what if it was in quarter two, but not in quarter three or four? So probably needs to, I wouldn't get super duper excited right now. I could see some implementation guidance around that, saying that it's got to be in recent proximity, not the past. So just stay tuned on that. Obviously, the second big piece is that they still intact is you can deduct the expenses associated with what you spent the money on, and then they added a little bit more to what's available in terms of the expenses that you can deduct. So that's all really good news. The other big piece that's in there that they were kind of not a whole lot of guidance around, it just says, and an extension of the CARES Act section 111.12, I believe is the actual verbiage. Well, what that is that's the section of the CARES Act that talked about the SBA picking up the tab for 6 months of SBA loans that were funded by, I think, September 27th. So what does extension mean? Well, they don't clarify that, but extension can mean a couple things. One is it could mean, hey, we're going to pick up another 6 months. That'd be fabulous. I doubt that it's going to mean that. I think what it's really going to mean is that the SBA said that they were going to go ahead and extend the deferral period that was available, meaning like, hey, we're not going to give you the money. The interest is still going to accrue, but you can continue to not pay us for additional time because that was set to expire on December 31st. So I think that the extension probably is going to refer to an extension of time. Lots of other stuff that's in there that's all pretty good that I'll leave to Jack, because Jack's got to be able to say something. I just wanted to steal the good stuff. But on the other side, what's really been silent from this bill is the stuff that's going away. There's also rent relief. That's going to be pretty helpful too. But sorry, Jack, had to steal that one from you. what the bill is silent on, and probably so don't count on it actually happening, is some of the stuff that happened, in the CARES Act, but then also, that they just did through presidential order, and that really is specifically associated with the payroll tax deferral, the employee retention credit, and that kind of stuff. So that's not been extended, in any part of this package. So presumably that stuff is going to expire, which again is, the ability to defer paying the employer portion of payroll taxes. The employees could also do that too, but I don't know of anybody that actually did. The employer portion of the payroll taxes, and then secondly, if you do not qualify for PPP funding, the ability to apply for the employee retention credit, and or the FMLA credit that was available. So those both expire, and there's not been anything in here that talks about potentially renewing those, from what I've seen. I don't know if we have any medical oriented folks that are on the call, but if anybody either is on the call or otherwise watching this later on, something that came up in a planning call today is that if you received one of the Health and Human Services grants associated with, keeping a medical practice open and helping you offset some of the costs of doing that associated with having to buy PPE or otherwise pay people, that money is still taxable. Like, HHS came out and said, hey, that's taxable. And there's been nothing that talks about it not being taxable at this point in any legislation. So, for those clients that we've had to incorporate that back into income. And if you're receiving the HHS money, I think you got to plan on the fact that that's probably going to stay taxable. So with that in mind, microphone dropped. On to you, Jack.
I did see Twinette is on the call, so I think she's in that healthcare world. But go for it, Jack.
Well, I mean, what's left? So
Yeah,
what he said.
he's still your thunder.
Unemployment, a few other nice little things.
All right, let's see if I can pick out the things that you didn't talk about. So just a summary of the numbers that, 500 billion was the Republican number, 2.4 trillion was the Democrat number. They're not necessarily giving this bipartisan group as much credit as I think they should, but really that was kind of what is the basis and foundation for a lot of things that you have the Democratic leaders, so Schumer and Pelosi, and then you have McConnell and others on the Republican side kind of coming together and saying, well, this is our plan, kind of like, and yeah, we kind of grabbed some stuff from the other place. So they are cooperating. The core 748 billion bill includes a $300 a week state unemployment insurance recipients, 300 billion for small businesses, PPP money, as Adam said, 35 billion for healthcare providers, 82 billion for schools. So they still have a lot of the other stuff in there. So remember that when we talk about PPP money or the stimulus package, it goes beyond just the PPP stuff, and that is helpful, but also slows things down a little bit. Now they did, as Adam said, they punted the two of the big issues, which was the liability issue, and so there are things that they are saying, let's table that for later and revisit that down the road, but we got to get something through the gate, hopefully before the end of the year. Now, what does, with having the ability to do video conferences and not have to be in the same spot to discuss things like you used to have to be in Capitol Hill, that maybe they can continue through the holiday to get things done. It used to be, it's a dead stop at a certain period of time. People get on planes and they just either don't want to deal with it or they can't. But so we'll see what happens over the next couple of days. And I know we keep saying it, I feel like we're booking record. It's like we'll see. But I think that now that we're past the election, that there is a strong push by lots of people, lots of industry groups. So remember, you have all these people saying, get it done, get it done, get it done. And some major powerhouses that are saying, you can't leave us hanging like this over the holiday, meaning trade groups and chambers of commerce and others that represent aggregation and collections of businesses, small, medium-sized businesses. So it's not just the titans of the world, the business world, that are putting pressure on them. So we'll see where we go from here.
So one of the things that we haven't talked about that I want you guys to expand on a little bit more, and that is we sent out a note regarding EIDL and some surprises that were underneath the surface that not everybody was aware of with regard to interest payments. So Adam or Jack, either one of you want to elaborate a little bit on that?
Yeah. So, with that, I think what people lost sight of is, they got EIDL money and they didn't have to pay it for a while, but interest accrues during that time period. Excuse me.
Bless you.
Excuse me. That was your opportunity, Jack. No COVID here. Interest accrues during that time period. So I think that, the challenge that we would see is that even though it's really inexpensive money, at 3 some odd percent with fabulous payment terms associated with it, it's still not free money. So, if you didn't otherwise have plans for the money, then, at some point you ought to consider paying it back. Meaning like, hey, if it's just sitting in my checking account, remember that it's going backwards in terms of value. It's really not any different than borrowing money off a line of credit preemptively and then just letting it sit there in your bank account, accumulating interest. I mean, there's reasons to do that. If you really are pretty fearful about the future, then you might want to consider hanging on to it as a safety net. But if that's not your set of facts, just remember that there's a cost. There is a cost associated with the money. So, just think about it in terms of considering going ahead with the payback so that you're not sitting here accumulating interest.
Yep, and just went back to look at some a little bit older information about when we were talking about EIDL and kind of the program parameters. It's 3.75 interest rate, long-term payment of 30 years, must be used for fixed debts, payroll, accounts payable, and other bills affected by the disaster. The use of proceeds is essentially working capital dollars. So you can't use it for, to buy out partners or other or capital improvements kind of thing. So, it's already limited in what you can use it. And I think part of the confusion was that you had that first $10,000 that is a grant potentially. Now there are some cross-pollination rules between that money and the PPP money and the forgiveness and how much all of that is. But that's from my perspective where some of the confusion comes in. And it's like, yeah, some of my clients, as it sounds like you guys had some surprises when they started looking at, okay, how are we going to book this? How are we going to deal with this? We got both things of money, but hey, we have all this money. What are we going to do if it hasn't been used? And we weren't sure if we were going to give it back. But yes, there is a carrying cost essentially of having this money in your bank account just to sit there as reserve funds versus obviously the PPP money, which technically carries an interest if it becomes a loan, but is not accumulating interest so it's not a deferral. It is truly forgiven versus the EIDL being more of a deferral of the interest. So yeah, there has been confusion in relation to all of that.
So Mike gave me a heads up that he was going to be asking questions. So good to see you here, Mike. Here's Mike's question for you guys. In the CARES Act, employer portion of payroll taxes could be deferred for payroll through 12/31/2020. Has this been extended?
No, that's what I was saying at the beginning of the call, is that's not part of this that we've seen. So that presumably will expire in December unless something else happens. Yeah, there is some lobbying going on to try to get it extended, but not that we haven't seen anything as part of this particular bill.
Yeah, I think that they're not addressing that maybe purposefully, but I think there's going to have to be there will be discussion about that one way or another, and people lobbying for that as an extension. Understand that we're, at least people who are reporting on a calendar year for their fiscal year, it's, you're hitting the reset button. So now you have more time to address certain issues because you're back to January 1, and you have, months and months of time before you have to report one way or another, at least, for some things, at least for the end of the first quarter.
Yep. Next question has come in from Mike. He said you had a couple questions, so that's good. The next question is, the new COVID relief partisan bill refers to a 30% reduction in gross receipts. What does this mean for a C Corp that files taxes based on accrual?
I think it's going to be based on your accrual reporting. So it's whatever your basis of tax paying is, and or your application process is what's going to be likely the application process, because nowhere in the questionnaire that they had for the over $2 million loans, which is kind of our only base of comparison, or the employee retention credit, which is our only other base of comparison, they ever say, and by the way, what's your basis of tax tax filing, accrual versus cash? So we can assume that it's whatever you're reporting. That said, we hit on it at the very beginning of the call, but it bears repeating. Right now it just says any quarter in 2020. But man, I have a hard time seeing them not coming out with later guidance that says it has to be recent proximity, because what that would mean is that they're effectively, potentially granting stimulus to somebody that had, a downturn during the middle of, honestly, if BGW is going to land up about where we thought they were going to land, yet technically speaking, in quarter two, which was April 1st to June 30th, I'm pretty confident we were down 30%, and it was all due to a delay associated with the tax filing. I know that I've talked about ethics and tax law changes, and everything else in this call, and it's like shocking me to say I'd have a hard time actually taking that money because sure, I can demonstrate that I was down for a quarter, but I've recovered. So I really feel like there's probably going to be some further guidance on that one to say, look, it's got to be like quarter four, or alternatively, and that similar to the employee retention credit, that it has to be demonstrated that that has been something other than temporary in nature for you. Like with the employee retention credit, you get to keep on taking the credit until you demonstrate a quarter of recovery. I got to see this is going to behave the same way, because it just doesn't feel right that, people that just experience a delay due to government shutdown, but otherwise have covered completely, can go for a second bite.
What's interesting is the psychology of things, where and with the impact on that possibility, or the lack of possibility of actually getting the next set of money based on the behavior exercised by the owners. What I mean is that we have owners that have really kind of, I guess, found a way to do more with less. And these expenses that were kind of ordinary course, whether it was, hosting parties, taking people to Panthers games, to, entertainment business expenses, essentially, how essential were those really to the core operation of the business? Obviously, there's a lot to say about business development and marketing, but because you couldn't do it, and you couldn't do lunches, and you couldn't do dinners, and you couldn't buy drinks, and you couldn't go to all these things where it's easy to drop your corporate credit card and be the host with the most kind of thing, and those expenses have been reduced. So you look at the alternative universes of business operations, and one being staying the course of where, and we've done this as to where we would have been if our behavior had continued per the norm as our historical numbers said we would do, based on this is how much we spend on marketing, business development, internally with certain things, that we cut those expenses away and we can see the delta between those two behaviors. And so two things on that. One is, okay, will that behavior continue now that we've seen that, hey, our net revenue, the impact on net revenue of our business, if we just change our behavior a little differently on expenditures that we thought were essential to the business, but obviously aren't because we've survived. But also to your point, Adam, which is showing a demonstrated need. Well, some will not have the same demonstration of need if they had said, well, we would have behaved this way. But now they have modified their behavior so that their financials look different, meaning their expenses are lower than they would have been. So the demonstrated need is diminished. And so our business is going to get penalized because they didn't need it, because they have scraped as much as they can off of their income statement as far as expenses go in order to survive. But for changing that behavior, and compare them to someone who didn't do that, that says, yeah, of course we had the need because we had to do all these things and we had to continue all these things. And instead of having an in-person meeting, we ship little mini champagne bottles to everyone, which I've seen done and my clients have done. And so those kind of things, I think it'll be interesting if the government at all addresses those kind of things. Like what if there is an analysis as to continuing your behavior and your modifications and not getting penalized for changing your behavior, which makes your financials look better, and therefore you don't have a demonstrated need. And I think that some would say, well, isn't that fair? I mean, shouldn't everyone go through that analysis? And if you still have a need, even after scraping, those are the ones that are truly in need of this money versus the ones that, well, found a way to remove the fluff and still survive and realize they really didn't need that fluff. So it wasn't a necessity, it was a luxury. So anyway, it's a long-winded way of saying that it'll be interesting how the government treats self-imposed restraint that has a positive impact on your financials, which then puts you in the category of not having a financial need, where you would say, well, that assumes that I don't want to reinitiate my business development marketing. I don't want to rehire certain people that would be helpful and would relieve our employees from working 80 hours a week kind of thing. So just a few thoughts on that.
So I'm going to start in reverse order because we've got a bunch of questions in here, but I'm going to start with one from Dan because he said, Jack's explaining our situation as well. We cut management salaries. So if there's a new PPP, will the forgiveness be based on more recent salary history or from the same period as before?
There's zero guidance on this in terms of what the funding amount will look like. The only thing that they have put in this is based on who qualifies. So you got to assume, KISS, it's going to probably be exactly the same as the original funding. They just don't have time to come up with something new, I think, at this point.
Yeah, I think it'll be a similar, but they'll learn from their mistakes, like some of the vetting as to, and some of the abuses and some of the other things. Like, I hope that we don't end up where we were several months ago, which is, hey, this is what's actually happened. I mean, there was a lot more activity in the earlier months of us doing this because they kept changing the rules. It really wasn't changing the rules. It was, but it was, this is what we meant when we said this. This is what we meant when we said this. So hopefully now they know what they mean and they say what they mean rather than saying something and then explaining it for several weeks later through additional notifications to the public through the SBA or through Treasury.
I agree, but that's making a huge assumption that Congress will actually change their ways and that politicians actually do. So I'm not putting my money on it, but Robert, good to see you on here. He's asked a few questions. So start with this first one, which is the 30% deduction for the quarter based on prior year or prior quarter?
You don't know. It just says, so you assume that it's going to be quarter on quarter comparison, but you just don't know. I mean, Jack could probably bring up the actual verbiage as I continue to talk slowly about it, since I'm not sitting in a computer, I'm sitting on my iPad. But I believe it says any calendar quarter decline in 2020, which implies that that's a quarter on quarter comparison to 2019. But it kind of goes back to the earlier statement. Man, if your decline was temporary, that is a little dubious.
So another qualifying question is, based on what we know, is PPP2, based on, that sounds kind of like a, I don't know, war game thing, PPP2. Is it, it's a Star Wars thing. Is it based on top line revenue or bottom line net income? You're calling net income net revenue. So
it's right now it says top line, I believe.
Top line revenue. Okay. And then
you got it up, Jack?
I'm trying to find it. Yes.
The next question while you're doing that, will PPP2 be 100% forgiven and tax-free?
You would assume so. Yeah, I got it up now. Here's exactly what it says. I've enjoyed reading this out loud. Subtitle A, Paycheck Protection Program and Small Business Support. Bullet point number 2, funding to allow the hardest hit small businesses to receive a second forgivable Paycheck Protection Program loan. Sub-bullet 1, eligibility would be limited to small businesses with 300 or fewer employees that have sustained a 30% revenue loss in any quarter of 2020. So it doesn't, yeah, so I mean that it doesn't really say what that's it. That's what we got to work on. Guys, I'm sorry. So yeah, we're speculating on implementation guides at this point.
I know. I was looking to try to find something a little more detailed, or maybe even someone, an insider's opinion as to what that might mean. But yeah, I'm not finding it, because this actually, I mean, it came out on the 14th. And has been, jostled around a little bit. So, this may not even be the most current unpublished version of this. So this is the best that we got right now.
So, David, I'm going to bust your chops here, because he's asking for a link that you just read from, Adam. And what he's going to do is he's going to take it and he's going to use it on his webinar tomorrow. So just busting your chops, David. Yeah, I know, I'm on to you, man. Mike Feldman has provided a link to the much longer document here, and it's www.cassidy, as in David Cassidy from the Partridge Family, senate.gov/imo/media/doc/BAI, as in buy drinks, 20965.pdf. And so what I will do is I will take that, instead of just having you guys know that you wrote it down correctly, and I will put this in the chat. And Mike says this one states that payroll you have to choose from for comparison is the lower of all 12 months. Oh, the lower of all 12 months of 2019, or the last months prior to the application. Interesting. So I'm going to put Mike's link in here. Hopefully it is transferred. So I just put it in the chat to all attendees. So if you would, somebody give me a chat back and say, yeah, that worked. And
I'll say that I don't know much about Mr. Cassidy other than he's a senator, Louisiana. So, you know, maybe he has the insider's view, which would be great. And hopefully it's not speculation. So just understand that this is, you know, one person's interpretation of it. And if he is an insider, then maybe it's closer to being accurate than others.
Oh, Chris. Well, so Chris is asking if I could reveal the full name and of Mike as well as his company. So Mike, you can hit me with a chat if you want me to reveal. Otherwise, you will remain anonymous as just our friend named Mike. Okay, so we have gotten permission. So that is Mike Feldman of T1V. And we are glad to have that affiliation with Mike. So anyway, yeah, Mike Feldman of T1V. Yeah, that's true. Wicked smart. I agree. So Mike also did say that was 2.5 times the average of those 2 periods. So just another qualifier from Mike Feldman of T1V. Wicked smart, as they say up in Boston. We have lost Adam's video.
Uh-oh.
Sorry, I was just looking at it to see if I had something new.
Oh, okay, gotcha.
So there, so in the chat. So sorry, there we go.
All right, cool. I thought, we may have a technical difficulty, but all right, good. Those are good questions, good comments. Any other thoughts or questions from our faithful attendees? These would be so boring without you. So let's see. Toinette, I knew I'd seen you on here. That's good. In regards to the funds offered to healthcare workers, I was afraid to accept the additional funds offered by DHHS since we were going through so much drama with PPP loan. In regards to the SBA loan, the SBA did waive the fee for 6 months as long as the SBA fee was made for the 6-month term. So thank you for weighing in on that, Toinette. Any other thoughts or questions? This has been a pretty lively group.
Well, not that anyone asked us, but I'll throw this in for a few minutes of stall in case someone is thinking or drawing up the bravery to ask a question. So we've had, and we've mentioned this before, that if you're going through a sale or a purchase transaction and there's PPP money in the mix, there are certain requirements that you have to go through. And even in some cases, you have to get the SBA's permission. There is a subcategory that if you do jump through certain hoops, then you don't have to get permission in order to complete it. But in essence, you're basically parking the full amount of the loan proceeds in an account just in case it doesn't get forgiven, the theory. And so there's been a lot of discussion about that. There has also been scenarios where, and the one I'm thinking about is a medical practice that we do work for, that there is a departing owner, and it is, what is the value of the company? And what is the value of the company with, obviously at this point, you have an asset of cash, hopefully in a separate account, or at least accounted for separately. And then you have the corresponding liability because it technically is a loan until it's forgiven. So it's a net zero impact. But we've had to run scenarios as to what it means if it does get forgiven. And also, Toinette, you had mentioned the HHS loan issue, and that's what triggered that, is that there's an HHS loan in there that may also get forgiven, but that is a little more uncertain in this circumstance. So if you're in the middle of dealing with ownership transactions and or sale or purchases of businesses or divisions or units, you need to take that into consideration. I know at least when I was speaking to opposing counsel who was not completely up on all the PPP stuff, I said, well, what are we going to do about that? And he said, what do you mean? I'm like, okay, so let's take a few steps back and talk about my understanding of that kind of thing, right? And so it was like, you're telling me my client has to park that money and can't, and Adam has mentioned it, that, you know, it has to be operating funds. There's all other requirements, so just be aware of that if you're in that environment.
So hopefully you schooled that guy or gal, given all the time and investment that you've made with us on these weekly webinars. So that's pretty cool.
In a kind way, in a kind and non-condescending way, because it's unfair that, you know, I get to, because of this, I keep my knowledge up on it and other people don't necessarily, because, you know, it's such invigorating topic, right?
Yeah, exactly.
Yeah. So I think my curious question is, are you now considered the go-to guy within Shoemaker?
Yeah, I get a lot of, we call that free work and goodwill within the firm. It's like, okay, when I need, you know, this advice from someone else. But yeah, we're very fortunate to have a very collegial organization. So yeah, there's a lot of sharing going on. And what do you think about this? But fortunately, we have tax professionals and others who are in the banking industry that really have taken call our SBA loan team. So yeah, all of you on this are getting a lot of the benefit from others that are part of that logo behind me. Yeah.
Yeah, that's good. So a couple more questions have come in here. Any idea if they intend to extend the FFCRA paid sick leave and emergency FMLA provisions that expire at year end?
So what was posted in what I've been looking at came from Senator Munchin's office, which was a summary of the provisions of the bill. What got pasted in this link is the actual bill itself, which may include something about that. Everything that I'd seen thus far is that everything that was part of the tax component of CARES, they were silent on, which would have been the employee retention credit and the FMLA leave credit. Meaning that unless it's in this bill, which we'll do a summary of afterwards, then it's not in the summary that got released from Secretary or keep on calling him Secretary. Maybe you should be appointed Secretary or something. Senator Munchin's office. It was not part of that summary. I don't know if it made it into the details of this bill because this bill just was released, and it's long.
Munchin, Mnuchin, very different. But
versus Oompa Loompas and Munchkins. There you go. Take that one.
This is, so actually I saw something that came in on the chat, so I'll just give a quick shout out on that. And that is from Karen, FYI, received SBA forgiveness for one of the companies they filed on 12/4. So far, so good. Couldn't have done it without you guys. Well, that's so awesome. You just made my day, Karen. Thank you. That's good. That's why we're doing this. This is from David. Lots of people calling me saying they're shutting the company down, but still haven't received their forgiveness. Can you talk about can you talk for a second about the process of dissolution with regard to PPP? Jack.
So from a tax perspective, I mean, technically you file a tax return when there's not a balance sheet anymore. So you basically have finalized out of the activity. So in this particular instance, you've got, presumably no cash, but still an outstanding liability unless you've already relieved it to the income statement, even if you haven't technically received forgiveness yet. So, I think that the technically correct answer would be to go ahead and, for all intents and purposes, shut the company down, but then submit your articles of dissolution and your final return in the year that you actually receive forgiveness. I suppose you could do it in 2020 if you haven't gotten forgiveness yet, but I think the technically correct answer would probably be do it in the year that you actually receive forgiveness, because that technically is the last year of activity for the company. Would be my take on it right now.
So I would say mostly yes. I think that there is the concept of dissolution, depending if you're talking about from a purely legal perspective or from a conceptual perspective, which is kind of the winding down of the business, essentially. And I think that dissolution and winding down get absorbed into the kind of a generic term of dissolution. In most states, when you file articles of dissolution, that's the beginning of the process. It's an indication that you are in the beginning the process of winding down the business, which generically means that you are collecting assets and you are paying liabilities to get to that point where you will file your ultimate final tax return. In some states, there's a filing point, a beginning and an ending, and you can't file that ending and truly be dissolved with the state until you have all of your financials and stuff in order, like the state of Delaware. But in North Carolina, at least, that you can file. So you could file it in 2020 as an indication of it, but really what governs the conceptually dissolution process is the finality of the financials. So when you're able to file that final tax return, the reality is you will have activity in 2021 likely. So even if you file your dissolution in 2020, you're going to have to file a final return in 2021 for 2020 time, and then I guess partially a stump period in 21. Now I'm kind of stumbling into the accounting world, but so you have because there's activity. So you end up having to file essentially, I think, 2 returns at some point. But it's the filing with the Secretary of State is to put the public on notice that you are no longer doing business. So you have to really be out of business and not doing, like, for example, doing drive-through or, carry out versus the dining room's closed. You're still operating the business. You're just not operating probably the main portion of it. So dissolution, you could do it this year, but knowing that you really can't finalize stuff until next year because you're not going to get forgiveness until next year, there's no rush to do it. And in fact, on the 17th of December, in order to get it done in 2020, you're in a pay to play time frame where you have to pay extra to get to the top of the stack in order to get guaranteed by the end of the year. Really, and we can, if anybody has a particular question about whether it should or shouldn't, but it's really kind of a coin flip because of the PPP stuff from my perspective.
So another comment that came in here from David is it'll probably be a lot more exciting next week after we actually have a real bill. And guess what? We won't be on here. It's going to be Christmas Eve. So the pressure will mount, and then we'll be back the week of January the 4th. So 4th, 5th, 6th, 7th, I guess, is the date that we'll be back. So hopefully the place won't burn down while we're trying to enjoy some time with our families. Any other questions out there? This is pretty lively group today. It's good. It's going to get even more lively, I have a feeling. And a Merry Christmas and Happy New Year to you too, Robert. Thank you for that. It's always good to see you on here. Any other thoughts from the gallery?
think we've covered as much as we can based on the content that we have in front of us. So I'm good to go. And Merry Christmas and Happy Holidays to everyone. I was hoping that I could show you guys. No, it's funny because this I'm gonna have to turn off.
Oh yeah.
Hold on, I'll show you. I feel like I'm diming people's time, but okay. So this is what I call the Thunderdome. My daughter didn't know what that was. My son knew because apparently it's in some Xbox games. And if she wasn't asleep, I'd bring her in here to show you guys. But that is what an 8-week-old black lab puppy looks like when she's sleeping, because I was sprinting down the driveway with her before this call to tire her out.
Thunderdome. I like it.
So,
Yeah.
so your plan was to have a kid and get a puppy? Wise move.
Yep.
One thing that I looked at doing for our little teaser post at Dark 30 last night, but I was going to use, Jack had sent us a link on Santa's naughty and nice list, and there was a link to it. And it's a really hilarious photo of Santa. And I almost did it, and I'll show you guys here. That is the cover, and it is from the North Pole Government Department of Christmas Affairs. So it's an official thing, the naughty and nice list. But I chose not to do that because I didn't want to get sued for copyright infringement from Santa. And especially when he's sporting, cool Ray-Bans like that, they are in vogue again. So Google Santa's naughty and nice list and see if your name is on there. The good news is Jack is on the nice list. Adam must have paid somebody a huge amount of money. He's also on the nice list. And I am on the nice list. So go Google that. But this way we didn't get into copyright infringement because I don't know. I just didn't want to have to call Jack and have him defend us when I knew better. So I chose to stay within the lanes.
I would have defended you using the educational purpose exemption, the fair use doctrine for copyright infringement. So you would have been okay, because this is
the thing is, if Santa wanted to sue me, I still have to have the war chest, even for a frivolous lawsuit. So until Congress does tort reform, which I have no confidence that they're going to do that any before they set term limits on themselves. So I just thought I'm going to be safe. Let's see. Hey, that is so awesome from Joe. One of the best things that's happened this year was becoming a customer of BGW. Thank you very much, Joe. We are glad to have you on board. And we got to know Joe pretty well through some of the comments and questions that we've had on this webinar. So that's pretty cool. An unexpected blessing for us for sure too. Any other thoughts or comments before we say sayonara? And when we were in elementary school, we couldn't wait to say, and see you next year.
Right.
That was always a big thing. Oh man. All right. Yep. See you next year, David. Thanks so much for being on.
Right. See you guys.
See you guys. Take care. Bye-bye.
Thank you.
Merry Christmas. Happy New Year.